Hello traders and welcome to the market opening preview on a Wednesday, hump day, June 14th, 2016. Traders, great to be with you as this is brought to you through FXCL Excellence in Trading. Traders, please come visit our website at fxclearing.com for your trading solutions. Traders, great to be with you, coming to you live from Thailand, bright and early in the morning for me, and it is 38 hours on Wall Street. Traders, got a lot to talk about today. I'm happy to say that all of our trade plans yesterday absolutely worked. I haven't had one of those days in a long time. All 6 currency trade plans we did yesterday were successful. I'm always glad when I see that happen. So let's get to it, and let me introduce myself to you, those who do not know who I am. My name is William Gilday. I am your moderator for the Market Opening Preview Series every single trading day before the London Open. Traders, I started trading in the year of 2006, and in 2008 I retired from a wonderful 27-year career as a firefighter paramedic out of the great state of Florida. Traders, 9 days later, got on the Big Bird, came to Thailand for a 3-month holiday. Well, traders, I'm in my 9th year here in Thailand, and I just really enjoy living in Asia. It's absolutely wonderful. The nicest part, of course, other than the country, the people, and the food, is the time zone to trade the markets. And yes, I can trade basically all 3 markets within my day. However, New York, I only get about 2 hours, maybe 2.5 hours in, because then it gets close to that 11 p.m. time, 10:30 p.m. time, which is okay because that brings me right into New York lunch. So it works out kind of nice. So I can basically trade Asia, London, and the first 2 hours of New York. So that allows me to keep my toes in the market during the trading day. And it's so important that we listen to fundamentals, especially now as lots going on around the world, and it does affect our trading. So I have a news feed that I pay for, and my news feed's on all day long, and I know what's going on. I know when things happen right at the moment, and it's just so important that you understand and get some kind of a grasp on the fundamentals and what's important and what's not important. And it takes time. Folks, I'm not there yet. I'm not perfect on fundamentals by no means, and a long way away from it. It's a learning process every day. And, it's just such an important part of trading. If you would have asked me that 4 years ago, I would have said, no way, I'm a technical trader, and that's it. And I love being a technician. I love reading candlestick charts. I love reading candlestick patterns. It tells a story, right? Along with price action, support, resistance, price structure, price failure, price levels, right? Price levels are so important, right? I like the double zeros, the 20s, the 80s, and the 50s, right? Those ending numbers are just so important in price levels, and you can mostly find reaction there. I do use a Fibonacci tool a lot. I put a lot of fibs on my charts. They're great for entries. They're great when to get out. They're just really good. And why do I like fibs so much? Well, not because I like fibs, but because everybody else is using them. I do use 3 exponential moving averages. I use a 200, a 55, and a 10 exponential moving average on my charts, and that's about it. So my charts are pretty bare. There's not much on my charts, and you'll get to see that in just a moment. So I put both of these together and I come up with a trade plan, and I put my trade plan in place, and I wait for price to hopefully come to me, and then we can take the trade. Yesterday I'll show you that we had a couple of trade plans that didn't make back to the pullback. However, the EMAs gave you a good indication that it's time to go, and we'll take a look at that in just a second. All right, that's a little bit about my trading. And let's get to the legal stuff. This is our risk disclaimer. Forex trading has a large potential rewards, but also a large potential of risk. You must be aware of the risks and be willing to accept them in order to invest in the Forex market. Traders, the name of this game is capital preservation. Live to trade for tomorrow. And we need capital to do that. So please, traders, do not trade with money you cannot afford to lose. Traders, always remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, let's get over to some news and commentary. Let's see how the markets close. I think we're 3 days now with red markets in the U.S. The Dow 30 closed negative 0.33%. The S&P 500 closed negative 0.18%. The NZDUSD closed negative 0.10%. And the small cap 2000 closed negative 0.19%. Like I said, I'm pretty sure Monday, Tuesday, Wednesday, we've all had red days. And let's take a look at the Eurozone. Not any better. The DAX closed negative 1.49%. The FTSE 100 closed negative 2.01%. The CAC 40 closed negative 2.29%. And the Eurostoxx 50 closed negative 2.02%. Not too good on that one, huh? All right, let's take a look at what's going on in Asia. Now, some of these countries are not open yet. Some of them don't open for another hour my time in Thailand. So the Nikkei 225, which is currently trading, is negative 0.55%. The S&P ASX 200 out of Australia is currently trading, and it's negative 0.63%. The China A50 closed yesterday positive 0.54%. And the Hang Seng out of Hong Kong closed negative 0.01%. 61% yesterday. The Kospi that is currently trading out of Seoul is currently negative 0.34%. Traders, let's head over to the economic calendar and take a look at what's going on today. We did have some light data come out today. The Aussie Westpac consumer sentiment came out at negative 1.0%. Previous was 8.5%, and there was no consensus, so it really didn't do anything. The Aussie dollar pair did not move at all. So quite a slow day there. In the European session today, we do have the Great British Pound Average Earnings Index comes out today. And then we have climate count change from the Great British Pound today. So the pound's got a little bit of action going on today. Other than that, it's a pretty slow day, my friends. If we come into the U.S. session, we have PPI today, month on month for the month of May. And we have, as we do every week, crude oil inventories on a Wednesday. And that comes out in the U.S. session. So we want to be alert to that. And that's it for data. We do have a little bit of data, but not a lot. And, I think that'll work out just fine. I just wanted to take a look at what gasoline. I think gasoline came out yesterday. There it is. Yeah, it didn't come out good. API weekly gasoline stock came out 254 million, and consensus was negative 1.250 million. So it didn't meet consensus forecast, and that was a red number. Okay, we just got to keep an eye on that. It didn't move the oil prices, right? It didn't make any really big difference there. Oil is still at $48. I think it was 44 cents when I looked just before I did this video. So oil is still there, and it's hovering at that $48 and $50 range, and that is nothing that we did not expect. We expected that kind of price range with oil. The dollar index is on, it's moving up, it's doing real well, but it's not helping our oil prices, and it's sure not helping our markets, right? The stock markets, like I said, have been red for 3 days. So, just keep an eye on it, and we can work around it, right? So commentary is, Brexit is still on the top of the forefront. I think the markets are going to get a little bit tighter. I was very surprised at the price action that happened yesterday in our currency pairs. We had some really good price action, and I did not call that. I said we were going to be pretty low in price action yesterday, and I was wrong. Welcome to the markets. But we had some really nice moves in the Forex currency pairs yesterday, and they had some nice trading yesterday if you caught some of these. So, you know what? Let's not waste any time. Gold is basically maintaining, by the way. There's no big move on gold, so just keep an eye on that. And, that's about it. I think, somebody had really low yields yesterday, 10-year yields, and it was lowest ever. I think it was out of the pound, the UK. All right, let's take a look at some currency charts. And this is the euro dollar. This was just a beautiful trade yesterday. What was the issue here on this chart, my friends? Well, the trade here was we never received the pullback, right? We never received the pullback. Remember, we were fighting this 200 exponential moving average yesterday, and we were waiting for this to break to the downside. However, we never got the pullback. It went sideways and then just dumped. Your key to get in this was your exponential moving averages. And the 10, again, crossed the 55, and we got a nice down move yesterday. And just a beautiful trade. Trade plan worked out fine. Today, folks, we're only looking at like a 30-pip trade here. We're not looking at a big trade here. We just want this to pull back to the daily pivot point and we'll sell it. Remember, my bias is bearish on the euro dollar. It's been for a long time. But I think this is all about the dollar strength, okay? And this is what we're looking at. So this was just a great trading opportunity yesterday. Probably one of the weakest pairs that traded yesterday was the pound dollar. Let's take a look at that. It did move. It didn't quite make where we wanted it to go, but it did drizzle down a little bit. You know, these candles are really, really wimpy. They're a lot of indecision candles. You know, nothing I want to trade, my friends. And I'm not even looking at a pound pair until after a week from today, when the UK votes on its referendum to stay in the EU or leave the EU. So today, what are we looking for? Well, I'm looking for an aggressive pullback because we haven't had any really, and we want this to come back up to the 200 exponential moving average, you know, at 42.67, and we'll take this all the way back down to 4100. And you know, I think this has some power that can really do it. And this would be a nice 55 pip trade if we can get this to come back down. You know, will I see it pull back? Probably not. I don't think we're going to see a lot of action out of the pound until after next week. And so I'm just, like I said yesterday, and I said Monday, I'm not trading the pound. No pound pairs are in my observation box to trade because it's just too volatile. It's just too crazy, right? All right, let's take a look at the Aussie dollar. Aussie dollar, like I said, just had Westpac come out, and no movement here in the Aussie dollar pair. And you know, we're just waiting for a little bit of a pullback here to the daily pivot point, and we'll just sell this. So we want to get in at 73.64. We'll get out at 73.33. It's a 32 pip trade. We're not, you know, like we talked about earlier, you know, we're not going for 60 and 80 pip trades where, you know, if it works, that's great. You just, you know, trail it down like yesterday. Some of these pairs moved yesterday really nice, including this one. And you just had to trail this to the downside. However, this did give us a pullback, and it did give us an entry yesterday. Not only that, it gave you a second one. So you can basically be in this pair now, heading back to the downside. And New York afternoon gave you that pullback to the 55 EMA. And what happened? We get red candles. Down she comes, and she's still heading down. And now she's sideways, of course, because we're in Asia, and there's no data in Asia. And looks like it's going to be a pretty quiet session today in the Asian market. So this worked out very well yesterday and gave us a nice indication, and it did give us a pullback, which was really nice. Let's take a look at the EURUSD, a pair that I was not really excited about yesterday, but absolutely did what we wanted it to do. Again, this pair did not give us a pullback, right? This pair just came down, and, you know, but we did get the 10 EMA cross the 200 and the 55. And that was your signal to get in this trade. When you saw the crosses and then you saw that candle below the 200 exponential moving average, you just jumped in there and grabbed it. The trade worked out very nicely. So we're above the daily pivot point now, and I just want this to pull back to the 200 at 52.65, and we'll get out at 51.90. So another really nice pair. It's definitely back in its trending mode. This is a nice stair-step action. This is nothing unusual here. This is starting to work for us. And remember, our bias is bearish. We want to sell the Euro Aussie. The only thing that might hold it up is, like I said, there's no data in Asia today, and there's no data out of the Aussie today. So it could be a New York trade or a London lunch trade. All right, let's take a look at the Euro Yen. Again, another nice trade yesterday. It did give us a nice two blue candles for the pullback, and this thing just came on down and worked out very well yesterday. Nice trade yesterday. If you didn't catch the pullback, you definitely caught that 10 exponential moving average and the crossover it did there on the 55, but then it pulled up. So depending where your stop was, you might have got hit and maybe had to re-enter. So just, you know, keep an eye on that. And then it came down very nicely. Now it's sideways, not a lot going on. Those candles look really small to me, and they don't look very healthy. So, you know, I'm bearish in this, and I put in a resistance line at 119.55. So I'm looking for an aggressive pullback, and I know the EMAs, my friends, are pointing to the downside, which means it's a battle to get back up there to sell this. I could have put a trend line there, and I just saw this as I'm looking at this chart. We could have put a trend line on where the current candle is, and if you go back to my line there where that red candle is, we could have put a trend line there and took it from that trend line to the downside. However, I would rather this get back above the daily pivot. We could just take it from resistance at 119.55, and we'll take profit at 118.57. This is almost a 100 pip trade, folks, if this works. So we will see. All right, and our last currency pair of the day is the New Zealand dollar, and this pair also worked yesterday. It did give us a pullback, and this was the one I was a little bit on the shy side yesterday. However, today is going to be a little bit more challenging because if you take a look at the last candle on the chart there on the right side, it has broken that support level, and now we need a pullback. We need to pull back to this daily pivot point or the 55 EMA at 0.7015. Now, if you wanted to go to 69.95 and take it from there, I don't blame you because we know that at 0.7000, there is a lot of orders there, probably in both directions. So it's going to be a battle there. So I would expect that traders are bearish in the New Zealand dollar, especially that the dollar is strong and the Kiwi is not. So this is a great opportunity here. The question is, when are we going to get this to move with no data coming out? So we'll just have to keep an eye on that. Traders, that wraps up our 6 currency pairs. I want to thank you for being with me on behalf of myself, William Gilday, and our great friends at FXCL Excellence in Trading. Traders, have a great trading day, and always remember to trade smart and not hard. Traders, we'll catch you in about 24 hours. Have a great trading day. Talk to you next time.